Let's get in Anant Goenka, MD of CEAT Limited, to speak about the quarter and the outlook ahead. Good having you, Anant. Thanks so much for joining in. I think the factor is the margins, but lay it out for us. What do you think are the factors behind the improvement in profitability this quarter?
Yeah, Ebitda margins have improved well from about 9% in the same quarter last year to about 15.5%. And that's largely because one, raw material prices have come off quite well with crude this time leading the way. Secondly, we found that our focus towards two-wheeler tires and passenger car and UV tires has worked out well. So our product mix has moved more favorably towards more profitable product categories. As well as operating expenditure, we have largely been working on controlling, and that has also helped us out.
What about your margins trajectory then going forward? Where do you see them stabilizing? Yeah,
going forward, I think my guess is that for the near term, we know our raw material prices that we have been buying at for the next 3 to 4 months. Generally, raw material prices have been low. So in my view, that is expected to remain to be quite stable at current levels. On the other hand, sales is also coming along to be a little challenging at this point of time. I expect going forward margins for the next 3 to 6 months to be range bound, maybe up 1-2%, up down 1-2%, not more than that.
What cost cutting efficiency are you focusing on, and how are you trying to improve your product mix, Anand?
Yeah, so what we've been focusing on are two areas. One is that on the two-wheeler side, our product mix has improved quite substantially. We're selling a lot more two-wheelers. We're seeing a growth of over 25-30% in these categories. So that has improved our product mix. Whereas our plant in Halol is now getting fully utilized. That is at over 90% capacity utilization, and that has also helped bringing costs down because of spreading of fixed costs. Finally, we are also looking at an expansion which is now very much on track, which is the expansion of our capacity at Halol for passenger car radial tires, and that is coming on stream in this quarter.
Right. What about capacity utilizations? What is it that you're working on right now, and with new capacities coming on stream, how is that likely to change?
Yeah, today's capacity utilization would be at about 85-87% kind levels. Largely in the older technology, cross-ply tires utilization would be at somewhere around 80%, whereas in the radial technology tires would be about 90-95% kind levels.
Your talks with large OEMs on demand revival, give us a flavor of that. What are they saying for various segments that you may be catering to?
Yeah, I think there's been a delay from what we had originally expected. Okay. We had thought revival should have happened by around this time, but I'd say still looks quite sluggish. So I'd say on the passenger car side, there's still very mixed trends that we are seeing. I think we are still about 6 to 8 months away from real good growth coming in. On the commercial vehicle side, I'd say overall the position is also weak. However, because of a low base and several years of showing slower growth, I feel that growth is looking to be a little bit better, particularly in the heavy commercial segment. And finally, I'd say on the rural side, it's been a bad year. It really depends on a little bit of how monsoon plays out, but for the tractor and two-wheeler OEM segments, it's been a very tough year. And I'd say the remaining part of the year also could be tough because the key seasonal period is just behind us.
The replacement side of the market, how is that shaping up then?
Yeah, on the replacement side, things are better. So while CEAT has reported flat growth in this quarter, replacement would have grown much better than the average of the company. We would be at about 8 to 10% kind of growth levels in the replacement in volume terms. Really the area which has got hit has been exports, largely because of competition from Chinese tires outside of India. So that has been a big area of stress from an export perspective.
Okay, Anant, we'll leave it at that. Thanks so much for taking the time out and joining us, and all the best for the quarters ahead.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.